All right, let's just get right into it. The crypto market is a sea of red today. You can feel the panic, right? We've seen massive liquidations, and Bitcoin has just plunged. So the big question on everyone's mind is this the dip we've all been waiting to buy? Or, is this the start of something much, much worse? Let's break it all down. And really, this one number pretty much sums up the entire mood of the market right now. The Crypto Fear and Greed Index is flashing a 14, which puts us squarely in a state of extreme fear. I mean, this is the kind of reading that makes even the most seasoned traders' hands shake. It is just pure, unfiltered panic in the streets. And that panic? Well, it comes with a massive price tag, a staggering $1.7 billion. That's how much was completely wiped out from traders who were betting the price would go up. So this wasn't just a small dip, this was a violent, brutal move that flushed a huge amount of leverage money right out of the system. So where in the world did all this selling pressure come from? Well, that brings us to our first major point, the shock from the big money. We're going to dive deep and analyze these record-breaking ETF outflows and the macroeconomic pressures that are frankly squeezing the market from all sides. Here it is. This is the smoking gun. On November 21st alone, a near-record $903 million was pulled out of the U.S. spot Bitcoin ETFs. Now listen, this is not your average retail investor panic selling on their phone. This is the institutional heavyweights. This is the big money, and they are heading for the exits. This is a structural, coordinated sell-off. And if we zoom out a little bit, you can see this wasn't just a one-day fluke. This chart shows the total for November, a massive $3.79 billion pulled out by institutions. This is exactly what analysts call a distribution phase. It's when the big players are methodically selling, pushing the price down to see just where that floor might be. But here's something that is absolutely crucial to understand. This isn't just a crypto story. Bitcoin does not live in a vacuum. The entire global financial system is feeling the pressure. And when that happens, what they call risk assets, like Bitcoin, are always the first to feel the heat. So it really boils down to this cause and effect relationship. We got strong U.S. jobs data, which, sounds good on the surface, but it makes the market really afraid that the Federal Reserve is going to keep its hawkish or tight monetary policy. That fear caused the S&P 500 to lose $2.7 trillion in value, and because Bitcoin is seen as a high-risk asset, it just followed right behind, dropping sharply. It's a classic risk-off environment. All right, so now that we've got the big picture established, let's move on. We're going to look at the future, right in the middle of this storm. We have to talk about the absolute carnage happening in the altcoin market, but we're also going to dig for those crucial long-term signals of strength. And this chart right here, it shows you exactly what happens when fear takes over. Bitcoin dominance has surged to over 58%. In simple terms, that means money is running for cover. It's fleeing the much riskier altcoins and hiding out in the relative safety of Bitcoin. It's a classic flight to quality, just happening inside the crypto world. And believe me, the damage to altcoins has been severe. I mean, most have fallen over 10%. But, and this is what's so fascinating, beneath the surface of all this widespread panic, we're actually seeing some surprising signs that institutional conviction in specific projects is still incredibly strong. And here are those bright spots. Even while the rest of the market feels like it's burning down, just look at this. Solana ETFs have seen 17 straight days of inflows. Money is still coming in. The same goes for XRP. We're also seeing some positive signs on the regulatory front and in these high-growth areas like real-world assets. So the key takeaway here is that while the short-term price action is ugly, the long-term fundamental story seems to be holding up just fine. Okay, this brings us to our final and maybe the most important section for today. Let's talk about an essential survival strategy. What are the key indicators you should be watching, and how should you be positioning yourself to get through all this volatility? I really want you to let this quote sink in for a second. It comes from the core analysis of today's market action, and it's so true. Historically, these moments of extreme fear, just like the one we're in right now, have proven to be times of maximum opportunity for people who can just keep a level head. The absolute worst thing you can do is sell into a panic. So how do we know if the bottom is in, or if it's coming? Well, we need to be data-driven and watch the key indicators. Let's break down exactly what you should be monitoring over the next day or two to really get a read on where this market is headed next. Okay, think of this as your dashboard for the next 24 to 48 hours. There are two critical signals. First, you have to watch those daily ETF flows. If the bleeding slows, stops, or even reverses back into positive territory, that is a huge bullish signal for a bounce. Second, the price itself. You can see there are key support levels that absolutely must hold to prevent another major leg down. Those are the lines in the sand. So what can you actually do right now? Well, here's your personal playbook. Step 1. Seriously consider reducing your leverage. The risk of getting liquidated in this environment is incredibly high. Step 2. Preserve your capital. It's not a bad idea to move some funds into stablecoins just to have that dry powder ready. And most importantly, Step 3. Avoid emotional decisions. As we've seen, panic selling in moments of extreme fear is almost always the wrong move. So that's where we stand. We're in a storm of institutional selling and peak fear, but there are these glimmers of long-term conviction just underneath it all. The big question really is for you. In the face of all this, what's your strategy? Are you buying this fear? Are you waiting on the sidelines for the dust to settle? Or are you de-risking? There's no single right answer here. Let me know what you're doing in the comments. Stay safe out there, and I'll see you in the next one.